So in today's video, we're going to take a look at the exact correct way to use time frames in trading, and honestly, this is something that can make the difference between being profitable and unprofitable. So a lot of the time, if you guys take a look at your failed setups or any trades that just keep consistently losing, it's mainly because you guys are just sticking to one or two time frames and not taking a look at the bigger picture and the smaller picture together. And this is a very big problem, especially for a lot of traders who are just starting out. They don't understand the difference between time frame alignment and kind of just sticking to one setup and just trading that one smaller time frame. So with that being said, I'm going to show you guys my exact time frame alignment strategy, and by the end of this video you guys should be able to implement this into your own setup and take a very different approach to trading. So every single morning what I do is I start off on the higher time frames, which can be the 1, 2, or 4 hour time frame, but I mainly like to use the 1 hour. But like I said, any of those works. It's up to your personal preference which one you really like to use. Now we're gonna start off on the higher time frame, and we're gonna mark out liquidity levels and any key level that I can really see, whether it's news highs, news lows, anything like that. That's gonna give me an idea of where the market's going to get reversals or when the market's going to get strong rejections, targets, everything like that. So in this situation, I marked out this high right here because this is a very key reversal point, and this is where we have a lot of liquidity resting. Okay, same thing at the lows right here. You can see another key level that we can mark out, and this is where we have a lot more liquidity also resting. So what I understand by taking a look at these higher time frame levels is this is going to give me the market direction. I understand that price wants to come and sweep these levels, and that's where we'll get a reversal to the downside. And same thing to the opposite end. If price sweeps these lows right here, I expect another reversal to the opposite direction where liquidity is resting. So this is giving me the market direction. This is a much bigger picture that I'm taking a look at. It's not just like a lower time frame where it's like, oh, this is a tiny little move right here. That is not important to me. This is giving me the overall market direction, and this is where most of my work is being put in on the setup. Now, if I take a look at the lower time frame, there's gonna be setups where, for example, break a structure, fair value gap, this one works out beautifully, and the trade looks perfectly fine, right? In your head, you're like, well, there's another break a structure, fair value gap, let me take a trade on it. You come to take that trade and boom, it just instantly rejects, it destroys the setup, it does not work, and you're like, how did I take a loss on this? How did this one work and this one didn't? What you are not noticing on the lower time frame is those higher time frame levels, okay? So what happened here is that price came and took out liquidity. So basically same exact thing that you can see on this chart right here happened right over there. Price swept a higher time frame liquidity, and price swept a higher time frame liquidity here as well. So whenever I'm trading the lower time frame and I see a lot of these failed setups and I'm confused, it's the only exact reason that this happens is because price is taking out liquidity and we're getting reversals, and you're just not seeing that if you stick to the lower time frame only. Now, why do we need the lower time frame if we can just use the higher time frame for all these things? Okay, the higher time frame, we cannot take an entry on it because first off, the range is too far. If we're day trading, we cannot take trades within like 4 hours. We're taking trades that are for quicker scalps. We're looking for smaller moves. We're not interested in like holding for these insane moves and a lot of volatility in this. So this gives me direction, okay, to understand what the current trend of the market is. But for the setups that I'm actually trading, that's where the lower time frame comes in. So it has to be a combination of both. These both go hand in hand. I cannot just stick to one or the other because that is going to be a total mess. All right. If I use the higher time frame, the lower time frame must go along with it. Same way to the opposite end as well. So with that being said, I want to take a look at a few live market examples of trades I've taken to explain kind of how the system works, and you guys can see how it works whenever I'm taking it during the live stream sessions and exactly what I'm looking for. So with that being said, let's go ahead and take a look at those exact setups from today and really walk through exact steps on this setup here. So here's a setup on AMD that I took today, and as you guys can see, I took this break of structure for rally gap call, right? And this ended up playing out beautifully. And there's two things that I want you guys to understand here. If I am taking a look at the lower time frame, number one, I don't know where to exit this trade. So I don't know, should I exit at this high right here? Should I exit off this strong push? What am I doing here? I have literally no idea. But if I go on the higher time frame, whether that's the 1 hour or in this case, we'll use the 4 hour first and then work our way down. Okay. So if we take a look at this more specifically, you guys will see that right off the bat, we have a key liquidity level right there at 132.27. Okay. This is where price had the next incoming level. And this is where I understand that we have a very key liquidity level coming up. All right. So at this given moment in time, I understand that if price comes and takes out this high, I expect a reversal. All right. This is where we had a very strong rejection in the past. A lot of selling pressure is still sitting there. And that is why I marked out this level this morning. All right. Now, if I go back to the lower time frame one more time, where I took the trade itself. All right. Why did I exit the trade right at that high right there? It's because I understand that price is most likely going to get a rejection at this high. So I understand that beforehand, and that's where my target is placed for the trade right there. So if price got a break of structure here and we wanted to push higher, no matter how clean that setup looks, I'm realistically not going to play it because I understand that whatever looks good on the lower time frame right now may instantly flip and just get a massive rejection to the downside. All right. So if we take a look right here, this breakout structure and fair value gap that I played out absolutely beautifully, right? We got up straight to the target. It tapped literally the top of day and it came back down. But we got a perfect exit on that trade because I had my target placed. And then if you take a look right here, price takes out liquidity, and look at this massive drop that comes in the market after we take that liquidity out. Okay, so this is now telling me two things. Number one, it was a target for a trade that I was in initially. And number two, I can look at so many beautiful setups to the downside now that I understand that the market's getting this rejection. It's not just like a little pullback because it actually swept liquidity. Is that clear? So in this situation, I see we sweep liquidity. I understand we want to make a move to the next level of liquidity, which on the 1 hour time frame was right here. Let's take a look, which was down here at the pre-market lows. And that's exactly what happened. All right. So not only am I using this for finding an entry setup, but I'm also using this to give me an idea of where targets are, where I can get all of these liquidity and key levels placed, and everything I really need to understand about the trade. I'm seeing that on the higher time frame. Okay. The only thing I'm not seeing on the higher time frame is that entry, and that is where the 1 through 5 minute time frame comes in. All right. So this was a trade that I took today, and a lot of people were confused. They said there was a nice breakout structure later on AMD. Why did it fail? And that is the exact reason. That is why I was not interested in a second retry on this trade, because I understood we swept liquidity. At this point, it's going to come back down. All right. So very simple stuff, right? We see that the first one ends up playing out. Second one, complete fail, because we understand the higher time frame liquidity. So with that being said, let's take a look at one more example from today, which was another really great setup that I can explain and show you how time frame alignment works. So if we come over here on Apple, you guys can see once again, same exact thing on the higher time frame. Okay. Price comes, we get a very strong sweep of the highs. So liquidity has been swept to the downside, and now I am interested in price moving down to the opposite direction. So on Apple today, am I looking for any long positions at all? Not in the slightest. Okay. The only time that I would look for a long position on Apple is if we came and swept liquidity. Then I would be like, okay, maybe I can start looking for a long setup. But in this situation, I see absolutely no reason to go long here. That's why a lot of people that tried to long this breakout on the pre-market high got completely destroyed, because they didn't take a look at what the higher time frame candle was doing. All right. So in this situation, right off the bat, you can see market is bearish. We're coming down. Everything looks pretty solid. So if I flip over to a lower time frame on Apple right here. Okay, let me get this off the screen real quick. Would I be interested in a long position in the slightest here? Not at all. No way that I would look for a long position, because first off, this is where a lot of people got faked out this morning. That I was literally screaming in chat today. I was like, guys, do not take this trade, because it's literally just like liquidity in the most clear way being swept, right? Some people took that trade, it failed, and that was the exact reason why a lot of people lost on that setup. Okay, now if I come over to the lower time frame, now I can all of a sudden start taking a look at trades that are breakout structure for value gap or anything to the downside only, nothing to the long side. Now I'm interested in maybe playing, let's see if the 2 minute has anything clear here. Let's take a look at that. Perfect. So now you can actually take a trade on Apple to the downside because you have a very nice breakout structure for value gap. Okay, all of a sudden, how do I have this higher time frame direction set? The liquidity levels are placed, everything is very clear to understand. It makes the setup super clear for us to see. There's no confusion. I'm not really confused here as to, oh wow, should I flip-flop between a long or a put situation? I'm waiting. I see what the direction is going on the market, and that's all I'm sticking with for that entire day. So as you can see, you're just getting constant setups to the downside today. Multiple breakout structure for value gaps. If you missed that one, you can get another one that's right here. You can get another one that's down here at the lows. Multiple beautiful opportunities to take a trade, and not just being like, oh, I see a strong green candle here, I'm gonna take an entry for a long. No, I'm biased towards the downside. I see that liquidity has been swept. I'm sticking with that bias throughout the entire day. So like I said, time frame alignment is insanely important, and you guys really have to put a lot of effort into learning and understanding how it works. And I really hope this video kind of cleared up a lot of the confusion with these time frame alignments, and it's honestly going to change your trading if you guys implement it correctly. So with that being said, I hope you guys enjoyed this video, and make sure to let me know down in the comments below if you guys have any questions and what videos you guys want to see next.